Hi, how are you doing today? This is Scott Kidd, the Yacht Captain Investor podcast. I'm Scott Kidd, and I'd like to welcome a special guest today, Gabe Barr and Bella Cohen of Deal Estate AI. They're here to talk about something that is happening now. It's not a future thing. It's tokenization of real estate. How you guys doing today? How you doing today, Gabe?
Doing great. Doing absolutely great. Thank you for hosting us. Thank you for being on your podcast. Sounds very interesting and love to kind of discuss the entire space of real estate and digitization in general.
Really happy for you guys to be here, and I really appreciate you taking the time. Just for people that don't know you, tell us a little bit about your background.
Been in the tech space over 25 years in different venues. Did some few exits and went into different type of spaces. Real estate is being one of them, but the overall space that I was always engaged was, in the fintech and the applications of fintech in the different spaces. Whether it was one time in e-commerce, and then there was another time in iteration of influencers, and so there's every time there is really a market that is pushing the tech into different direction from a disruption point of view, and real estate is the one that we found the least space of being disrupted in the last couple of years, and it's evolving. It's being a very sleepy market and very sleepy space in general as far as tech goes, and the recent years that the market is, they can pivot into PropTech space. They even labeled it as a PropTech. So the entire space is getting more tech-driven facilitation. So that's what we decided to take, and we went into a specific area that we know the best, which is multifamily, where we understand that this is the most underappreciated customer base as far as business-wise. So we said, okay, it's time to really kind of push the envelope and change it.
Well, that's definitely true. I found from my own experience that, I came from a tech background as well before I started working on the yachts. There's a lot of spaces that are very far behind as far as tech is concerned, and I know real estate is no different because it's probably a decade or so, probably even longer behind, because a lot of the records are in multiple different places, and the process is much slower than if you were buying something else. What got you to the point where you started creating a Deal Estate AI?
Well, it's not Deal Estate AI is only a brand, but it's not Deal Estate AI. It's actually belong. This is really the tech space in the understanding of, what do we bring into market? What type of tech are we integrating and facilitating for property owners as well as for the tenant? Obviously, the acquisitions of AI and machine learning in this process made it a lot more feasible. And for us, it was really just a very natural space to be in. And the concept is to really see what is the main issue that property owners are facing. And, it doesn't take a genius to understand. Multifamily property is a business. You run a business, you care about the bottom line. And if the bottom line exists, the NOI determines the value of the property. The NOI goes down, the same market cap, the value of the property goes down. So it's a direct correlation between your net operating income to your property value. But here's the problem. There is only one stream of income coming into the multifamily. There's nothing else, right? There's only rent, and there's so much rent you can charge. So if the market is not susceptible to rent bumps, then you are stuck with what you have. There's the concept of value add. It was really in the end, and the last couple of years when, was people went into syndication, and there's a lot of a frantic desire of the value add properties. I'll just go in, renovate the property, do some cutback, bring some cutback, raise the rent, and then from that point on, value increase. Basically, it's a natural movement of a property, which makes sense because the property real estate will go up in anyhow over time. There's going to be an organic appreciation irrespective of the rent bump. But we're all expecting to do it even faster. So we're saying 5 years for multifamily is predominantly 5 to 7 years. So you get the 5 year. But if you're not able to raise rent, you're not able to raise your property value, irrespective whether the market cap changes or not. Let's say the market cap hasn't changed, so the interest rate kind of stays the same, and there was an adverse effect to the interest rate. So again, we're going back to the same issue, that one source of income. That's it. So we went out and we decided that we're going to disrupt the market. We're going to bring in new opportunities to the multifamily properties and create additional sources of income. Me as a property owner, if I own my own property, you, Scott, you own a multifamily property, you are in a position where if you want to deliver highest return to your investors, you need to increase your NOI, or even for yourself. So double your NOI, double the property value. But what do you do when you don't have that source of income? Well, we went out and we built a very disruptive piece of tech to come and help the property management as well as the tenants to create a more reliable space. What I mean a reliable space is that if you look at the tenants today, they pay their rent. When you have an A property, core value properties, you have amenities, and these amenities are the pool, the gym, or the other areas of amenities, but you don't see them in C and B. Some you might get them in the B space and the big classes, but you are going into a more disruptive space in general and when it comes to C and B. What I mean by that is that on the average, 55% of tenants will change their residence at least once every 2 years. Now you're facing the lease up. So you have, let's say 50% of your tenants, you have to bring new tenants every 2 years if we do a linear retention. So, and there's a cost of acquisition. For each one of them is a cost of acquisition. We went out and started looking at why do people leave? Why do people choose to change a residence? The thing is that what struck us as very funny is that people tended to leave, obviously, for the reason it's a job or I wasn't happy with the property. These are the type of reasons that we're kind of accustomed to. But then we decided to change the research and we looked at people that stay. Why do people stay? So we went out and interviewed some of those and we realized one of the main factors of retention was actually connectivity. I have a friend that lives in the building. My kids play with my friend's kids. So they grow up together. They go to the same school. Now you're seeing people are more apt to connectivity and connection rather than, I don't know anybody in the building, why should I stay? When we realize that when people are connected and there is more alignment into my neighbors, there is a higher chance of retention rather than moving up. So that was really, it was very surprising to find out that this is really one of the main reasons. Then we dive in even further, we dig deeper, and then we realize that this is an epidemic, right? Especially after COVID. People are just locked in social media, do nothing, or social activities, but social media becomes the main channel of communication, and they don't even know their neighbor next door. Bella recently moved into an apartment building. So we went out, and the first thing that we did is we built a very robust engagement platform for tenants. We kind of, okay, so what do tenants want? We created the marketplace for them to kind of, even build their own businesses if they want to sell and rent. So now they have the options for rentable and sellable items. Now they can even start a business within the complex. We even expanded that on other complex with a very robust advertising system, but that's another layer. And that was the main element. We went from there. And then we added rideshare. You can go and invite Uber, but if you're going out to the airport and you can either take some people with you, can lower the carbon footprint, but we're not taking anything out of it. This is yours. Your tenant's going to pay, your neighbor's going to pay you. So now you have the offers of creating some different offers at clubs. You want to set up your own clubs, book club or running club, or you want to set up an event, right? So maybe 4th of July. All that is embedded within the app. So everything is there. Then we went into even further. We went into, you want to schedule maintenance. The first thing that I would do if I'm a tenant, I would call for the maintenance guy. Mm-hmm. So we said, okay, before you go to the maintenance, let me give you an AI. Just tell us what the problem is. The AI will analyze it and then give you a full screen of if this is something that you can actually handle by yourself. I mean, if you want to call, there's no problem. Just send it to the management. The AI will dispatch your maintenance guy to come over, but maybe it's something that is resolvable and you don't know how to resolve it. So we've added a lot of features like that into that and booking system. I've seen a property management go with like a pen and paper, just writing down all that is something.
It's a lot of paper.
Yeah, so we got that resolved. Now you have a booking system. Just book it in on your online booking system. It's all within the app. And other features.
It sounds like it's a very robust social engagement platform where it's community based, where you're actually building a community, because that's you raise a valid point of during COVID, we realized how small of a community we actually are and how little community we actually have around us, because a lot of us are very detached where we live. But if you have an app like that where you can be interactive in the community and help the community and offer services that basically it's only limited to the people that are there, but it's really unlimited the amount of services that you can actually offer. I remember speaking with Bella about, community-based health insurance, a lot of things like that you can offer that you can't really get by yourself. Whereas if you have 100 people signing up for insurance, then you can get a pool and you get a better price. Yeah. You get economies of scale, auto insurance, all those things. There's so many values to that by making strategic partnerships within the app. Along with the tokenization, what is the largest hurdle that you're facing in implementing this tool?
Let me piggyback on what you just said as far as the advertiser, the offers that can be brought in. The idea here is that we're creating this community engagement based where tenants are going to be more opt-in into engaging with the other tenants. That is a direct effect into retention, meaning that will basically now retention is going to increase, lease up is going to increase, turnover is going to decrease. All that stuff is going to benefit the landlord, property owners, right? But then one of the major key here is that they say, okay, this is great. I'm getting some out of it because there's a cost reduction as far as the acquisition cost of new tenants. This is great, but it doesn't end there. So we went on all these advertisers space that we are putting together with the right tenants, with the right base tenants. Now we're saying, okay, let me give you back quarter of what I'm making. I'm going to give it back to you as a landlord. I'm going to give it back to you as the property management. Now we're in a position where, let's say we bring another $100,000 of advertisers space, 25 grand is going to go straight to the property. Now, 25 grand on a 5 cap, right? Every 10 grand on a 5 cap is a $200,000 value. We just gave you $500,000. We just gave you $500,000 of value you didn't have before. We just increased your value $500,000. That is a very critical to the understanding. What is that we're bringing in other than the community? Well, because some of the landlords, the tenants are paying me rent. I don't care about that. So now they're in a position where they're actually benefiting for value appreciation. The value appreciation is coming from us. Not only we're able to increase your value because your tenants are now happier, you have happier customers. Now you're getting a portion of what we're making. We're going to send you a check every month. If I go back to the challenges that we face, let's put tokens aside for a second. The challenge that we see is really for the property management, especially the property management, but the landlords, is to really comprehend the concept that there is another option that is a viable option. Because I had a discussion yesterday with someone with 4,500 doors. We're in a position where we have 40 complexes. How does the money flow? That was his main concern. How does the finance work here? I said, well, it works because we don't charge, the tenants pay you directly. It doesn't go through us, but we pay you what we're getting. You're getting a check from us at the end of the month. There was a lot of concerns about the integration side. But once we overcome that objection, it makes a lot of sense. All right, there's a tool that brings me more money in. I'm getting more money into my checking account, and now my value goes up, and I can make my investors happier.
I see it as a no-brainer. I just was thinking of one hurdle would be, like you said, the property owners not understanding the value and thinking that it's going to be, because we've all had those issues with implementing a new software tool where they say, oh, it's going to be easy, and then it becomes this large mountain of thing. But all it really is a subscription-based service where all the tenants would sign up, right? I would think that's not as big of a hurdle other than getting the landlords to realize the power of what it could be. For me, I wouldn't think of it as a big hurdle for implementation, because I've lived in one of these buildings after we sold our house in Plantation. We moved into a high-rise apartment for about 6 months, and it had a more of a property management software where you signed up for it, and you know, certain services like they're going to be painting today, they're going to be, announcement, like a bulletin board type thing. It didn't offer any type of services or they didn't have any joint agreements, where something like this is, I think, would be amazing for a lot of people, because us as operators would be a great thing that you can offer for the tenants. Then they have access to knowing who their neighbors are, getting involved in other activities, getting discounts on restaurants in the area, or just other services they may.
Yeah, it's exactly what you're saying. And again, from an advertiser perspective, we've created also a very robust advertising system that even the tenants, let's say I have my own arts and crafts, I can go ahead and offer it to my to tenants in the complex. And now they're my residents, and we don't charge anything for that. It's all yours. Whatever they pay, it's a P2P, peer-to-peer, pay you whatever you charge. You can use our wallet. We have a wallet with a crypto wallet that you can use your crypto coin as well. We have our own coin, so they can use our coin for transaction, but we don't charge anything for that. But if you want to go ahead and expand the reach, you tap into our advertising system, and then you can say, I want to sell it to the complexes around, and then you just basically, you're now in the further expansion. But you have a very, very unique audience base to come in and understand the services or the product and services. The advertising system is very robust by itself as well, because it gives a lot of opportunities for people. There's a lot of opportunities for business perspective to kind of elevate that, bring the services into more active. This is really a living organism that we built and we put together. But we didn't leave it to the property management to manage. It's all going to be managed by us, because property management, their main concern is to collect rent. Their main concern is to make sure that they are meeting their goal. That's their main concern. Otherwise, if not, they're fired. I mean, for them to have the tenants happy, it's a side effect. It's not necessarily their main goal. Their main goal is to make sure that all checks are being collected, low delinquencies, low eviction. I've heard Ken McElroy once says, if you're bad, you're fired. If you're good, you're also fired. Because if you're good, that means that I'm paying you too much.
Yeah, and I think it's a very robust tool. I would strongly encourage listeners and everyone else to check it out, because I think it's only going to enhance the resident experience. Yeah, I've always said it for a long time now: happy resident, happy investors, happy landlord. It goes that direction. If they're not happy, they're going to move, and that turnover is the biggest expense.
We actually checked it out. It's about $1,700 per tenant for acquisition. You have to almost spend $2,000 per tenant to acquire a new tenant.
Where do you see tokenization being at this point of the real?
Yeah, before we go into the tokenization, we implemented a very robust AI agent. So in most apartment buildings, they have what we call the other income, reserve parking, trash removal valet, or other services. This is usually, that goes straight into the NOI because it has really low expense ratio type of services. But the property management are not incentivized to sell those. These are sellable services. So what we did is we implemented a very robust algorithm for an AI agent that you list your services. The AI, based on tenant's profile, which we're learning building his profile through our algorithm, we're able to match the type of services that he most likely will buy. So you list the services, the AI will take the services, start putting the offers to the tenant. And once they decide to buy, it will actually be a compelling offer. The agent will basically close the sale. So they don't have to go out there and start selling these, upsell these type of services. These services will immediately be offered to the tenants, and the tenants will basically, if they choose to opt in, they will close it. It will show up on their invoice, and that's it. You're parking too far from where your apartment is. We're going to offer you maybe a reserve parking just next to you. That's going to be shown to you based on the analysis that the algorithms are. That's really where we're going into the deep end of the sophisticated algorithm goes into the tokenization. And that brings us to tokenization because tokenization is a key element for liquidity. Most of the, as we know, when you buy real estate, that becomes an illiquid asset. You buy it, you have finance, you have the equity, and the illiquid asset. Tokenization permits liquidity, provides liquidity. I explain it very simple. When people ask me, what is tokenization? How tokenization works? What is the concept of tokenization? Let's understand the concept. The concept is that you take a property and you take it public. That's what it is. That's really what it is. Because tokenization is an asset-based coin, or it's an asset-based certificate. It's something like share. You have a share that is attached to an asset. Tokenization, you have a share. You have a certificate that is attached to the property value or cash, whatever you decide to tag it to. But it's always an asset-based certificate. The fact that the blockchain is more of an environment, the network allows you to digitize your property from an equity, basically from a cash value, into a digital contract. And now you can trade on the secondary market and also primary market, but now it's being offered to all. Now think about it, even take it further. This is what we've built into the system, that you can offer to your tenant. Offer your tenant to take portion of that and own in a token because you can buy them. So tokenization creates liquidity immediately when you decide to liquidate or decide to tokenize your property. Now you don't necessarily have to put it all. You can take only portion. That's a different issue. That's a governance issue. But as far as liquidity, if you are, and we're providing this comprehensive solution with the SEC regulation that you are regulated because you are selling security. So we put everything into one package. We will get you the compliance, we'll get you tokens, you'll put it on the listing, and you'll start trading that on the secondary market. Offer it using our app, using our software. You can offer it to your tenant, which eventually, if I'm a tenant, I can offset the rent. On one end, I'm getting income, which is the cash flow from generating from rent, from what the property is making, because I'm an LP now. On the other end, I'm paying rent, so I can offset this expense and income coming in and increasing my disposable income. So tokenization is where we see the market is heading. It is a smaller market right now. It's about $5 billion market, real estate tokenization. But we expect not only that the market is going to be around the $16 to $20 trillion market within 3 to 4 years. It is going to be an interesting journey to end.
It definitely will be, because I think you already see a lot of the large asset buyers like Blackstone have started to buy into the tokenization. When you see them coming, they're usually slow to get in, but quick to implement because they see the value, because then they can offer it out to their shareholders, which will make it even more valuable because of the liquidity. What are you seeing like in the next 6 months to a year as far as like implementation? Are you seeing the same hurdles and the same issues? Because I know commercial real estate in general is very slow to adapt to new things. And I see that as the biggest thing just coming from the tech world, that even things that were just implemented like on the fly in other industries, there's a lot of bit of control, and everyone has their little piece of the pie, especially when you're changing over the title. There's probably about 20 different businesses that need to be a part of that transaction, especially when you're tokenizing. Everything would be on the blockchain and all the record would be right there, which to me would only streamline it and make transactions easier. However, it seems to be the opposite, where a lot of people are making it more difficult because they have to justify the work that they put into that transaction.
You're absolutely right. It is the same hurdles adapting to new tech. This all falls into education. It all falls into the comprehension of what is tokenization to begin with. I get to speak to very sophisticated people, very small people, and there is that fear of adopting new tech in the range of crypto. So people compare token to crypto. Someone can tap into my wallet and buy and steal my crypto, and I'm done. My token, on the other end, somebody can tap into my wallet and steal my token. I can just cancel that and just reissue new tokens because it's an asset base. It's not a solo base.
That's what I tried to explain to people as well, but it's taken a little bit, like you said, because it's a different concept. I like your example of basically securitizing and just make it into an IPO. It's an easier thing because people understand that.
Yeah, that's exactly what it is. To take a property public, taking a property IPO, it's going to cost you a lot of money. Put it on a blockchain, it's going to cost you 50 grand.
A private placement memorandum can sometimes cost you that much.
Yes, and so now you have it all. You have the security side, you have the offering, you have platforms, you have the investors. It makes life life a lot easier and more simpler, and it creates liquidity in the market. And now you can tap into international markets as well. Yeah. Now, if you do it right, you can tap into non-accredited investors as well. I just want to mention that, for instance, that tokenization and the entire concept, we are running right now, for instance, the same thing. We're running crowdfunding for BP Long. This is going to be open to the public, and people can come in, invest from $2 to $150 and all the way up. We're raising not a lot of money, $5 million, not a big chunk. We've been bootstrapped that, and we've been financed it ourselves, and now we're providing the opportunities to come in and share the growth. We see ourselves in 4 or 5 years maybe going into an IPO ourselves, let people kind of join this journey and enjoy and participate in that. Yeah, I mean, this is definitely it's a viable and very exciting opportunities for us, for investors, for tenants, for landlords, and the fact that we're all the only one in the market that have this concept that is a 3-tier concept, a stool with 3 legs that just to hold the stool, that gives a token, the landlord side, the tenant communication, the tenant engagement. This is a fully robust system that kind of tackles all what multifamily needs.
It's really impressive. I think that the future is very bright for BP Long, and just bringing those sectors together, like you just mentioned, it can only get better and better. And as more people adopt, I think something like this will be more and more commonplace. If people want to learn more about you guys and what you're doing, what's the best way that they can find you?
Obviously, drop us an email to either bella@bblong.live, or just go on our website. There's a chat bot there. You can use that, or basically any way to reach out. Best way to do it on LinkedIn or email. I think that will be the best way to go out and reach us. So we'll happily respond very quickly to anyone that is interested. Right now, we're getting major attraction. We're meeting with investors as well as with operators, like I said, the one I met yesterday, that are now starting to realize how this is going to make their life much easier and make them more money eventually. This is really what it is. And help their tenants, help their customers be happy. We make them happier, and then they're all going to be thinking about it.
It's definitely a very powerful tool, and I really appreciate you guys taking the time to come on the Yacht Captain Investor podcast. Look forward to speaking to you guys more and more about this stuff, because definitely be tracking you guys and seeing what everything you're doing. I've thought about these things for a long time, and I think this is the future is now, and what you guys doing is now. And they used to say cutting edge, but I would say this is more bleeding edge. It's more ahead than anything else.
True. That is
I really appreciate you guys coming on and speaking to us about it. I look forward to our continuing conversation. Thank you so much.
Thank you, Scott. Have a wonderful day. Thank you.
Thank you.